Hi everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's video I'd like to follow up from the MTPredictor advanced training we were doing in yesterday's MTPredictor customer webinar. I'd like to start by looking at the YM, because here we were talking about losing trades and keeping risks small under control. And we showed that there was actually a trade set up here that would have produced a -1R loss. Then another trade set up here that would have produced a -1R loss. Then when we left the webinar we were actually in a long trade as the market was going up to this particular trade here, and obviously you can see it didn't reach that target before reversing down. So were there any reasons to either protect this trade quicker or look to reverse to a short trade? Well, there were a couple of setups here come in. So if you were a standard trader, you could have seen the STF was black, and if you had have decided to swap to a short trade, you would have been stopped out here for the first long trade, so that would have been plus 3.2R, and that would have then more than made up for the two losses earlier. I think this particular trade setup here then would have been stopped out for a -1R loss just for a tick there. Then there would have been another setup here that was coming down quite nicely, and at the very least you should have had your stop for break even. So the worst case scenario is you should have been about break even on this. If you had decided to hold your initial long trade for this higher target here, what you should do is look at the longer term charts, in other words the 15-minute charts. So if you had held as the market came down and then were looking for the market to rally up, was there any reason in this area here around 1 o'clock that you should have then been deciding to come out of your long trade? Well, yes, there was, and I always talk about having a look at the larger degree charts, and here you can see the market was going up, and then at 1 o'clock 1300 hours New York time we had a TS1 sell come in on the 15-minute chart. This meant that the larger degree trend was now turning to down, and you should be looking for short trades. If we also put the DP on from this prior high here, you can see this was the same area as well. So at the very least then you should have been starting to trail your stop a little bit closer to the markets, perhaps just under this consolidation area here. So at the very least you should have then put into the bank about plus 4R. So if you had have taken the first two longs at -2R and then held this long up into this area when the 15-minute chart reversed, plus 4R would have more than made up for the losses and put you in profit for the day. Okay, so what was happening on some of the other markets? Well, the boss, as we call it, is the ES, and as you can see here it came in again at the 1 o'clock time with an automatic setup here. There was a history triangle because there was a double top, but this would have been labelled as a TS1 sell at the time, so that gave an indication that the ES was then swapping to the short side on the longer term charts. If you look at the 3-minute chart, there was no setup there. However, on the 5-minute chart, if I just draw the 5-minute chart, there was a very nice TS3 sell there, which then would have got you into the short trade as the market came down. On the NQ was very interesting because if I look at the longer degree chart on the NQ, if we put the DP on from the prior high here, you can see that that actually nailed that high there. Market made an initial low, made an initial correction. So in and around this particular zone here, which is around 11:30, you should have been looking for short trades, particularly down into the 3:30 area when we got a TS3 buy setup come in. So if we look at the 3-minute chart, you can see that's indeed what we got there. Remember, this was a larger degree 15-minute resistance area, initial decline down, initial rally up. So you could have been playing this as a holy grail trade setup, perhaps aiming for the typical wave 3 WPT down here. Now, as I just said earlier in the webinar, in this video, even though you set your initial expectations of a trade early in the trade when it starts to come in, you must follow the 15-minute chart to see if there's any reason whether you should adjust that larger degree trend view or perspective, if you like, as the market unfolds. And here you can see that around the 3:30 area we got a TS3 buy setup coming in, and this was coming in also at support from that low there. So in this area you should have been tightening your short trades, and rather than anticipating the market to carry on down to new lows, I'll put that same DP on from there, and as you can see that comes in at around the low of the day there. You should have been tightening your stop and look to get stopped out maybe in around this area, or at the very least trail your stop with the ATR stop, and that would have banked a nice plus 4.2R. So this is a good exercise in that even though you set your large degree trend expectations earlier in the day, follow the 15-minute chart, so if there's any reason that large degree trend changes, you can then adjust your shorter term position accordingly. And as you can see, you would have been short on the NQ and caught that decline for a very nice trade. The market that was best yesterday was the Russell Index. I've put the decision point on here already. I'll just take that off and show you on that on again. Is that we go back to the prior pivot high. There it is. We put the DP on, and as you can see, that nailed the high, which was actually the day before, which was actually just the high on the 29th. So here we had on the 30th, which was yesterday, the market was going down. It then rallied back up into here, which would have been considered a wave 2 or B. The market then declined down absolutely beautifully here in what was an ABC rally there. But the point being is that at this point in time here, we would have anticipated this was a potential Holy Grail trade setup and positioned ourselves accordingly for a strong strong decline. It just means that the market didn't get to its typical wave 3 WPT target before the market closed. So now if we go to the Russell Index 3-minute chart, you can see I've placed this analysis on already. I'll just clear this off. So this was our 15-minute high, initial decline down, initial rally up into our TS3 sell, put the analysis on. You'd then be going for the Holy Grail target of the typical wave 3 WPT down here for a potential 10.2R. Market came down, came up to, gave you an opportunity to add or pyramid your position to add additional short trades as the market came down. And as I've already said, was there any reason on the 15-minute chart to change your view like we had on the NQ? No, there wasn't, because there wasn't any automatic setup coming in at this low here. So on the 3-minute chart, you'd have just held it short all the way down and then been stopped out at basically the close for an absolutely beautiful 7.6R trade. So a very, very good day on the Russell Index yesterday, which turned out to be the best of all the 4 USE minis, with this lovely TS3 sell here for a potential Holy Grail. Opportunity to pyramid here on this TS1 sell here, but at the very least held the short down into the close for a lovely 7.6R profit. So a very, very good day on the Russell Index yesterday.